Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at a potential Bitcoin miner capitulation. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, I'm just here on lookintobitcoin.com and specifically the mining charts, as we're going to be going over quite a few of them today to discuss this potential upcoming miner capitulation, because we've started to see just a few hints that this may be approaching. So first of all, we're just going to look at the Bitcoin hash rate chart. Now this is the total computational power securing the Bitcoin network and competing to mine new Bitcoin blocks. And if we just zoom in a little bit here, we can see that recently we've had a fair amount of large swings in this hash rate, quite big and noticeable fluctuations. These fluctuations aren't necessarily uncommon, but I think a lot of people, just because we've had this parabolic run to the upside in the Bitcoin hash rate, are potentially getting a little bit uneasy regarding the hash rate and the potential for new miners coming into the market and existing markets potentially expanding their operations. Now, the Bitcoin network is one of the, if not the most secure networks globally, so a little decrease in the Bitcoin hash rate wouldn't necessarily impact the security of the Bitcoin network. But if we look at something like the hash ribbons indicator, we can see there is actually a strong correlation to an increase in the hash rate and the increase in the price of Bitcoin, or a decrease in the hash rate and a decrease in the price of Bitcoin. And most recently, we have actually seen a hash ribbons sell signal, which is when the 30-day average of the hash rate crosses beneath the 60-day average of the hash rate. And as we can see, indicated by these red, almost pink areas on the chart here, these indicate once a sell signal has happened. And we can see in most of these circumstances, we did actually see a little bit of downwards price action following that. On the contrary, once we see these cross back up, it is one of Bitcoin's best performing buy signals. So we do have that to look out for. If we zoom in a little bit here, we can see it's not exactly a concerning sell signal. I would classify it for the time being. We've seen a very temporary dip beneath from the 30-day to the 60-day, but it has crossed back above. So we just need to see a little bit of a positive reaction in the Bitcoin price to hopefully give us a new buy signal. But we can see this indecisiveness from miners is giving a few traders and investors a little bit of uncertainty going ahead in the next few weeks and months about the situation that miners may be in. And if we go to something like the Puel multiple, which is comparing the daily coin issuance of BTC denominated in US dollars compared to the 365-day or yearly average of the same metric, we can see that this value, this Puel multiple, has been stagnating for a number of months now. And now we have seen some very low volatility within the Bitcoin price action. So of course, this is having a lot of a contribution to this stagnation in the Puel multiple. We've never really had the Puel multiple stay so constant for such an extended period of time. We can see it's a very cyclical metric. And even in the intracycle swings, where potentially, if we just look back to the 2018-2019 cycle, when we had this intracycle run up from 3,000 to around 14,000 before the COVID dump, we could see that this was an almost constant uptrend before an almost constant downtrend. And then again, in the most recent bull cycle, we did have brief periods where it was pretty constant, but not towards the length that we're currently seeing. And of course, this is heavily influenced by the Bitcoin price, which is seeing historically low volatility, as we've discussed recently on the channel. But again, because we're seeing these large fluctuations in the hash rate, the hash ribbon sell signal, as I said, it is giving a few people a little bit of uneasiness with potential miners. One thing that I also find quite interesting is if we actually connect the peaks of the Puel multiple, they actually line up really nicely. And we can also do the same for the bottoms here to see that this decrease in Bitcoin's price volatility is also having a noticeable impact on the Puel multiple, as we see this really stagnation in upside potential as these peaks continue to decrease. But at the same time, we do see the bottoms continue to increase. So what we can also do is, if we just look at potentially where we see these intracycle midpoints tend to top out, we can see we have actually just topped into this area. If we just circle all of the previous intracycle peaks, such as here in as early as 2013 and here in 2015, 2016, and again, like we discussed in 2018, 2019, we can see Bitcoin usually does have this exponential run up from the lows, this mid-cycle peak represented in both the Bitcoin price and the PUL multiple. And we have almost seen that. We have very temporarily bumped up into this, albeit crudely drawn, intracycle peak area. So maybe we are due for a little bit of a retracement in this multiple. But we can see, as we said, this has kind of limited our upside potential for the PUL multiple, especially if this continues to decrease. In the next cycle, we may not see considerably higher metrics than we're currently seeing. And again, this does give a little bit of confidence towards miners because we aren't seeing minings on a daily basis go substantially below what has been a historical yearly average. So maybe again, this is referencing towards the growth and maturity as Bitcoin as an asset class, as it doesn't have these wild swings, or if it still has these wild swings, they're at least taking place over a much more extended period of time. So maybe it's just miners are taking a more longer term outlook on the mining potentials of Bitcoin going forward. Now, if we look at something like the stock to flow, this is probably having a huge impact on their decision making currently going forward. We can see the stock to flow model is modeling the price valuations of Bitcoin based on its based on the incoming flow of new supply compared to the existing supply. So this stock to flow model was traditionally used on markets such as precious metals, gold, silver, etc. But it has been recently modeled for Bitcoin. And we can see it does follow quite closely. Now, if you're a believer in the stock to flow model or not, it's undeniable that this will have a large influence on the decision making of these miners. And due to the correlation of the Bitcoin price and the hash rate, if a lot of miners are seeing this and seeing that Bitcoin at the 2024 halving event, where the inflation rate of Bitcoin is going to be cut by 50%, it's going to halve. This is, of course, going to be having a big influence on their decision making to potentially delay expanding their operations, to potentially cease operating entirely if they don't see it as a profitable venture going forward, because a lot of miners rely on mining BTC and actually selling it just to fund their operations. And if we're seeing low volatility and stagnation in the Bitcoin price, potentially it's just not as profitable to be a Bitcoin miner, especially with an inflationary decrease upcoming to continue operations. If we go to something like the miner revenue in fees versus rewards, the yellow area here is indicating the percentage of their earnings made up of transaction fees. So once anyone sends a Bitcoin on the network, they pay a fraction of a Bitcoin just to be able to send their BTC, and this Bitcoin goes to the miners for mining the new BTC blocks that contain all the transactions. But we can see this actually makes up a really small percentage of their miner earnings. Currently around 97%, just over 97% of miner earnings are coming from block rewards. Now, as we've discussed, miners are currently trying to mine new Bitcoin blocks which contain transactions, but they also get a block reward, which, as we said in the halving event, is going to halve by 50%. If we go to something like the miner revenue by block rewards, we can see with each of these halving events, the daily amount of Bitcoin that miners are receiving halves. So currently it's around 800 to 900 BTC per day that miners are earning. Previously, before the 2020 halving, it was double that, so around 1,800 up to 2,000 potentially. So in 2024, we're going to see this half to maybe just 400 or 500 BTC a day. So unless we do see a big increase in the Bitcoin price to sort of catch up, it is going to be a strong consideration for miners in the coming weeks and months whether it is worthwhile continuing their operations. So just to summarize, with the recent hash ribbons sell signal for Bitcoin, alongside stagnation in the PUL multiple, many traders and investors are anticipating a potential miner capitulation, which will result in many miners switching off their machines and a stark decrease in the Bitcoin hash rate, which historically has a strong correlation to the Bitcoin price. And without a price increase for BTC, many miners may not currently be as profitable as they may have predicted. And with the 2024 halving closing in, that will result in a 50% inflationary rate reduction. We may begin to see larger fluctuations in the hash rate going forward. Although something we did discuss, as the PUL multiple contracts on a macro basis, on a much longer term cycle by cycle basis, it may limit opportunities for Bitcoin miners as it caps the upside potential, especially when comparing the shorter term daily earnings compared to the yearly, more longer term earnings. But it also prevents a larger shock in profitability. So we may see, rather than these huge spikes to the upside and massive decreases in hash rate, it may become a much smaller fluctuation amount in the hash rate once we really stabilize, especially after the halving event. So maybe miners are just preparing for more long-term operational as we switch from traditionally when we were mining Bitcoin on GPUs, on personal computers, to these huge multi-million-dollar warehouses, it may just become the norm to expect much less volatile swings in the Bitcoin hash rate as Bitcoin matures and grows as an asset class. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, what do you think is the current situation with miners? Do you think they're considering potentially turning off some machines, potentially seeing a miner capitulation, especially following the hash ribbon sell signal? Or do you think this is just a temporary pause? We're about to see hash rate continue to increase. Whatever your thoughts are, let me know in the comments and on social media. As I said, I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.